Monty once again from DPL Surveillance Equipment. Um, Doing my morning chores again. Spent a little time, as usual, reviewing certain things going on in the market. It looks like the Turkey lira is still crashing, and the Turkey economy is still being impacted overall, unfortunately, as a result of what Donald Trump is proposing as far as not working with them because of I think a prisoner is supposed to be released from Turkey, and Donald Trump is making certain threats and such against Turkey, and it's having a great impact on the economy. I guess that's one reason why we want to have Bitcoin, so that your economy in your country isn't subject to some lunatic president in another country. And the same with China. China is taking a look at tariffs and imposing tariffs on the United States in retaliation for the same thing going on with Chinese products coming into the United States. So it looks like we have a very volatile economic situation whereby one person in one country can definitely affect the markets and the economies of other countries. And, I understand perfectly that, you want to resolve these disputes one way or the other, but, real people's lives are being impacted. And when you go to the gas station to get your gas in your car, you're going to spend a lot of money on gas. And when you go to the grocery store and the farmer's market and such, if these trade tariffs are eating away at your salary and your paycheck because Donald Trump or whoever is in office is trying to make a statement in the financial markets with some other country, you're being impacted. Donald Trump is probably sending his maids and butlers and drivers and whoever, they do the shopping for them, for the Trumps, and his servants and such have a certain amount of money or whatever amount of money necessary, and they don't have to worry so much about the impact of his decisions. You have to worry about it. I have to worry about it. So I guess we should keep things in perspective in terms of how this pans out. So anyway, before I go off on too much of a tangent, I'm doing my morning chores, wiping down my car, reviewing what's going on in the financial markets, trying to get an idea of what the priorities are for today. I know I'm going to work out at the gym, probably 4 hours, 5 hours. Then I'm going to hit the sauna, hopefully 15 minutes, 20 minutes, 25 minutes. And then I'll do my yoga stretches at the end of that. And then go home and relax and eat. That's probably what I'll do. I gave my website designer permission to start the Bitcoin integration into the shopping cart. We had it set up somewhat before, but something happened. We didn't keep it updated as far as the ability to accept cryptocurrency, so we kind of let that fall by the wayside. But now I'm going to make a priority out of hopefully using Bitcoin as a payment alternative and keeping it updated and promoting it, mainly because we're tired of the credit card companies and such. Oh yeah, before I forget, you may ask, who am I? My name is Monty Henry, owner of DPL Surveillance Equipment. We're a full-service security and surveillance equipment company. We have lifetime guarantees and warranties on all other products, 24/7, 365, tech sales, and customer support. We have the largest inventory of items that not only can you buy, but you can rent them and you can lay them away also. And we have rental products that are for sale because we want you guys to be able to purchase the rental products at discounted prices because we want to, clear out those rental products, and at the same time, we can't sell them as new because they've been rented out. even though they're in good condition. If someone rents a bug detector, for instance, or a GPS tracker for a week or two, the products are still going to be in very good shape. They're going to have a limited warranty, and you will have a professional, state-of-the-art surveillance product at a discounted price. So that's the good news. And you will have some tech support and customer service and sales support and all that, so don't worry about that. What else? The website is pretty much 99% revamped. And so the website is revamped and it's looking good and it's redesigned and it just looks fantastic. All of the bells and whistles are there for you to use. It comes up very good in mobile searches on the internet. I was just making sure last night, for instance, double checking how the website comes up in searches and how it looks when you use your mobile phone and all of that, to make sure everything is optimized and for mobile and very easy to search on and navigate and all of that. Looks fantastic, I have to admit. And that's an ongoing project, but at least all of the heavy lifting, 99% of all of the important things are done. Just going to be adding some tweaks and refinements here and there. So anyway, in addition to all of that, just make sure you guys understand the, let's see where I want to go with this. Let's just get into today's article, and if there's anything I forgot, I'll bring it up later. Today's article, speaking of Bitcoin, speaking of cryptocurrencies, today's article is titled, let's see, what is it titled? Oh, Cryptocurrency Market Plumbs, 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 New Deaths in 2018. Basically, the article stated that the crypto market is going down to new deaths or new lows in 2018. So, what does that mean and why do we care? Okay, let's explore that. Glad you asked. I think the day before or 2 days ago, the market capitalization of Bitcoin and all of the cryptocurrencies combined was at 191 billion. And that reached 300 billion at least at the height of Bitcoin when it was really soaring. So a lot of people are wondering, at 191 billion, what is going on, right? Is this the end of Bitcoin and all of that? So I read this doomsday scenario article from the Wall Street, and it's basically it'll basically give you the impression that Bitcoin is on life support and that the end is near as usual. Just so you guys know, the end has been near for Bitcoin probably 200, almost 300 times. There's a website called Bitcoin Obituaries where a lot of these naysayers, we have recorded all of the doomsday end of the world death blows to Bitcoin, whether it's energy consumption, whether it's regulation from government, whether it's electromagnetic pulse bomb or something going off. All of these things were supposed to be death blows to Bitcoin, right? But they haven't happened. And after 10 years and 250 or 300 posts in the Bitcoin obituaries, it's kind of humoring to look back and read these articles and read these posts from these people, so-called experts, who have been predicting the early demise of Bitcoin. Okay, so It hasn't happened. We're waiting, but the pundits are running out of ammunition. Meanwhile, Bitcoin is getting stronger with SegWit. That's an upgrade which allows us to scale and add more features and do further interesting development things with Bitcoin. We have Lightning Network, which actually adds larger block sizes, adds a lot of speed to transactions, allows us to bring those fees and prices down substantially. And a lot of people are indeed transacting now with very, very low fees, 80% less than they were before. So between these speed enhancements and the scaling enhancements and the lower fees built into the protocol now, the pundits again are trying to latch onto something, but they're grasping at straws as usual. So let's get into the article and find out what is it that we should be so concerned about now, according to the Wall Street Journal. Okay. A broad investor retreat has pushed the market for digital currencies down 70% from its January high, reflecting user frustration over their modest inroads into commerce and a general shakeout in speculative investments. So we'll analyze that. Okay. Now, frustration over inroads into commerce. What does that really mean? Well, I guess a lot of people were under the impression that, the entire population of the United States, for instance, was going to immediately switch over to using Bitcoin immediately and reap the benefits of using this cryptocurrency, this alternative form of payment and currency, like overnight, and everyone was going to be happy instantly. Okay? What did happen was a lot of people found out about Bitcoin and they totally disregarded the idea that there was a white paper which made no mention of making a ton of money in an instant and getting rich. But what the white paper did reveal, and I actually read it, that was the impetus for me getting into Bitcoin. The white paper talked about how the current financial system was causing banks to dictate and control and manipulate how money was used and circulated and distributed. Satoshi Nakamoto did a very good job in terms of addressing certain key things associated with how we do transactions. One of them was credit card companies, for instance, who allowed chargebacks and transactions to be reversed, and all of the exorbitant fees that were being charged. He figured out how to integrate technology into Bitcoin so that you didn't have to worry about chargebacks and high fees and double spends. Basically, a double spend means basically that you can spend money numerous or almost unlimited amount of time without anyone hardly stopping you. In other words, with traditional fiat, if you're not careful, you will be able to do fractional reserve lending if you're a bank. Now, for banks, that's a good thing because they don't have to back up that money with anything. They can take $1,000, your deposit, and create $9,000. That's basically double spending, in essence, monies that they are not entitled to spend. So, yeah, double spending is a big deal. And you really want to have the ability to control how many times or how much someone or what someone can do with that original deposit. And in Bitcoin, we don't allow double spending. We don't allow fractional reserve. We don't allow the creation of additional monies because built into the protocol is something that says, for instance, you could only have 21 million Bitcoin. Built into the protocol is something that says this transaction, every transaction is going to be transmitted over the blockchain and identified as a separate transaction. And you won't be able to lend again, borrow again on that money. Now, there are some institutions on Wall Street that are trying to compromise the way Bitcoin was set up initially, but I think the market ultimately is going to dictate that we will have the choice finally of staying completely away from that type of corruption in our system. So, again, going back to the article, user frustration, I don't think users understand that they need to be committed for the long term. Okay? And a general shakeout in speculative investments. That basically refers to the idea that there are a lot of altcoins, otherwise known as shitcoins. We Bitcoin maximalists, we call them shitcoins, and basically that means that these altcoins, these additional cryptocurrencies, about 1,500 or 1,600 of them, they try to mimic Bitcoin. They try to come out with the new Bitcoin, and they profess to be Bitcoin killers. But a lot of us maximalists, we already know it's futile to compete head to head with Bitcoin. So those projects, as we like to call them, they're supposed to stand on their own merit. But a lot of them, just so you guys will know, a lot of those altcoins, you can include Ethereum and even Litecoin and Neo and Augur and EOS, all of these coins actually were overhyped and pumped and promoted, and a lot of them are basically are worthless. Now, unfortunately, people got really excited about those altcoins because they want to discover the new Bitcoin, right? Everybody wants the new Bitcoin, the Bitcoin replacement, the Bitcoin killer. But I can tell you a lot of these altcoins are not going to be Bitcoin killers or replacements for Bitcoin. They're going to disappear slowly but surely. And just like in traditional financial markets, and my background is such that I have a lot of experience investing in traditional securities. Over 20 years or so, I first started out with a number of blue chip companies, actually. AT&T and Microsoft and Intel and McDonald's and Verizon and all these companies. We sat down when I first started investing when I was 19 or 20 years old. You sat down with pencil and paper and you analyzed these companies. You analyze earnings per share. You analyze your return on your investment. You analyze equity, debt ratios, and stuff like that with pencil and paper. So you figured out what you're investing in. Most of these investors nowadays, in the crypto space particularly, and not even so much just in the crypto space, but in the regular traditional markets, a lot of new investors, they don't have any idea what it means to analyze their investment. In other words, they're not going to look, excuse the noise, they're not going to look at an annual report. They're not going to look at a white paper. They're not going to look at anything that warns them of what it is they're investing in or advises them in terms of what this investment is, what it really does, where are the markets, where is the money coming from, etc., etc. Okay, all of that information, for better or for worse, needs to be scrutinized by investors. When you invest in something, you are supposed to know what you're investing in. But a lot of these people, and particularly in Bitcoin, in the crypto space, they heard of a neighbor getting rich. They heard of a friend or a relative or somebody at work mentioned it. And then they just want to go out and grab it and get rich as soon as possible, like the other person, right? So that's what happened with a lot of early investments and these altcoins and shitcoins and even Bitcoin. And a lot of people are being shaken out right now. They're being shaken out as we speak. And they should be shaken out, because if you don't know why you're investing, if you don't know about the technology, you never read a white paper, you never listened to developers talk about the differences between this coin and that coin, and you're going to be investing for the wrong reasons, okay? And this article also talks about something about Bitcoin being not very practical or useful. And I just want to say, for those of you who like to go on trips around the world and such, I'm not quite sure why they would even say that it's not practical or useful, because me and my wife have been traveling in a number of different countries, and we got more vacation trips scheduled, and it's financed by Bitcoin. So if that's not practical or useful, then I don't know what is. And besides, the article also talks about it, and I'll put a copy of the article in this alongside the podcast. So it also talks about, you can't use it very much for e-commerce, but I'm not quite sure where that comes from either. So either the authors are just misleading you people and don't want you to be involved or something, and I'll get to that in a minute. But we have, for instance, something called a BitPay card, BITPAY card, BitPay card, and we have a Shift card. The Shift card is issued by Coinbase. The BitPay card is issued by BitPay.com. Using a BitPay card and a Shift card, they're almost like a credit or debit card. You can do e-commerce. You can do regular brick and mortar store purchases with Bitcoin, Litecoin, Ethereum, etc., using your Shift card, right? So if that's not useful, if that's not practical, I don't know what is. When I go to Costco and fill up my car with gas, guess where the money comes from? It comes off of a Shift or a BitPay card. So again, I'm not quite sure what they mean by not practical, because my car has gas in it and now, so that's useful. I think that's practical. The groceries from Costco, So yeah, don't be misled, you guys, because when these pundits and these, particularly the wealthy people, they like to kick Bitcoin, particularly when it's down. I noticed the timing of some of these negative articles, particularly in the Wall Street and some of these other places. They'll come out when Bitcoin is at low points, right? They'll come out talking about it's not useful, it's on its last legs, people are bailing out, etc. And that couldn't be further from the truth, mainly because Bitcoin is being adopted at a rate that's consistent with growth that's sustainable. When the speculators and the get-rich-quick people get involved, they cause so much excitement that people lose their minds and they forget about the fundamentals. But the fundamentals are such that we want slow and steady growth, and we want adoption in a sustainable, steady manner as well. So anyway, don't let those guys talk you out of you putting 5 or 10% of your portfolio into this asset class, because if you don't, you're gonna be listening to the J.P. Morgans and the Goldman Sachs and the Morgan Stanleys and the Fidelity Investments talk about how well they're doing, while you're going to be talking about how you missed out again. And the new economy, the new Facebook, the new Amazon, the new Apple investment. Okay? And then you have to wait another decade or so in order to get another opportunity like this. Let me see. There's a person mentioned in the article. He seems to understand more about what's going on with cryptocurrencies. His name is Samir. no, his name is Kyle Samani. He's a managing partner at crypto hedge fund Multicoin Capital. And speaking of hedge funds, there are a number of hedge funds that are putting client money into Bitcoin and cryptocurrencies overall. So, this type of institutional, these accredited investors, they are the ones who are going to be very happy, and they are the wealthy players who typically come out ahead because they don't listen to these negative nannies and these pundits who kick these investments when they're down. Because a lot of these guys, they actually want the investments to be cheaper as a result of either negative news or just market declines overall, because that's when they go in, that's when they buy more. You don't buy assets when they're most expensive, you buy them when they're less expensive. If you go buy new pants, new shirts or shoes or something, and you can get a 40 to 50% discount, that's probably when you should buy it as compared to when it's full price. So, again, that's what the rich and wealthy people do. They buy as much as possible when they can drive the asset down as compared to when it's overvalued. You buy it more when it's undervalued as compared to overvalued. And there's a Mark Grant. He's a chief global strategist and managing partner at B. Riley FBR Incorporated, who has for months been warning clients against putting money into cryptocurrencies. Now, Mark, in my opinion, is not going to be working for that firm very long as compared to Kyle Samani. I think Kyle is going to be tremendously rewarded for making sure his clients get access to this new cryptocurrency with the best performing track record of all cryptocurrencies, all asset classes for that matter, for the last 4 years. When your clients hear that another firm has been making extraordinary returns, like Pantera Capital Investments, they've made 10,000% return for their clients. And I think those people are very happy. But this individual, this Mark person, what did I say his name was? Mark Grant, I don't know if he's really doing his clients any favor by not giving them some exposure to cryptocurrencies. This is a very revealing sentence here. Let's take a look at this paragraph. Now, just to frame this properly, the writers, the editors at the Wall Street Journal are trying to give us an idea of why we have negative market sentiment in Bitcoin and why the prices are declining so much right now. They're saying, I'll quote this. In part, the underlying sentiment shift is being driven by the rise of the dollar amid solid U.S. growth, a series of Federal Reserve rate increases, and a pullback from riskier securities issued in emerging markets such as Turkey. The MSCI Index, a world index, a measure of global stocks, topped out in January and hasn't been able to reclaim its high since then, while Bitcoin prices remain below their December peak. Now, let's analyze that. Now, if the dollar strength and higher rate increases by the Federal Reserve, if those are positives, and if those are the reasons supposedly why Bitcoin is losing value or declining in value, and if people are pulling back from riskier securities in emerging markets such as Turkey, then this really doesn't address the fundamental underlying long-term issues associated with the United States in terms of what's going on. Now, let me preface that and let me make sure you understand where I'm going and why I say that this is not enough of a reason, because the United States has some structural issues. We may have a strong dollar temporarily, but people outside the United States, even with a temporarily strong dollar, they don't want to pay more money for our goods and services. That's what happens when you have a strong currency in your country. people outside the country have to pay more to buy your goods and services. So that's not a real positive for people outside the United States. And besides, most people know, I think by now, that the dollar strength is very deceptive, and because the value of the currency is what's important. And the dollar has lost 98% of its value, as a lot of you insiders know, over the last, 40, 50 years or something, probably. And that's why when you go to the grocery store and the gas station and pay your bills, whatever, that's why it takes so much money, because of the lack of value in the dollar. It's backed up by nothing. All of the printing has devalued the currency. So rather than beat that dead horse, these people who wrote that part, talking about a strong dollar, they're absolutely insane. Excuse this noise. And then that paragraph also mentions rate increases. Now, I can tell you that rate increases are not a positive. Rate increases mean that the loans outstanding, $131 billion worth of loans in the United States, consumer debt at $131 billion approximately, is not a positive. Okay, it would be a positive to say there's escalation in savings and investment by Americans. If Americans, instead of saving 3% of their income or less, if that went up, to 3 to 5 or 10 or 15 or 20 or something like that, that would be a positive. But when you have higher rates, because the Federal Reserve is raising rates, and because you have higher rates in the United States, that means all the loans are going to be they're going to increase. The car loans, the mortgage loans, the personal and business loans, that student loans, or anything that adjusts alongside these rate increases, that's going to be a burden on people. That's not a positive. That's a negative. So I'm not quite sure why they mention federal rate increases. And as far as emerging markets are concerned, again, that's more or less a symptom in terms of what's happening in emerging markets. That's a symptom of a problem, a larger problem. That's when you have the IMF and the World Bank and the Bank of International Settlements. These guys are running around with truckloads of money, printed money, newly printed money, and they're throwing it at these emerging markets, and they're saying, take our money, build your infrastructure. But no one is talking about the fact that that's worthless money. And as soon as you borrow it, you got to pay back that money in real labor and in real goods and services. If you can't, then our companies over here will be glad to take over entire industries. They will take over your banking industry. They will take over your water distribution, electricity, utility industries, etc., because you borrowed that bogus money that was worthless, that U.S. dollar fiat, newly printed money from the IMF and the Bank of International Settlements and the World Bank. So anyway, that's what happens when you take that worthless money printed in the United States. That's Lazy Bones. I think he agrees as well. He's our cat. He agrees as well. So let's see what else we can cover here. So yeah, there were some problems mentioned in the article. They're mentioning Ether, they're mentioning Augur, they're mentioning Ethereum. Again, these projects were overhyped. They were compared to Bitcoin. They were supposed to replace Bitcoin. And a lot of people threw a lot of money at those particular projects. And a lot of investors just, got too excited, and they wanted to make quick money. And a lot of them didn't take a look at the validity of the projects in terms of whether or not the projects actually had any merit or not. And I can tell you, again, from my 20 or 30 years of investing, you have some companies, or some strategies rather, that are going to be productive, some strategies that are not going to be very productive. And once you throw your money into penny stocks and ICOs and other areas where you don't scrutinize management, you don't look for real credible products or services, you don't analyze annual reports, you don't talk to people within the operations, within the company about, actually what they're doing or whatever, then that's how you get burned. So anyway, a lot of these newbies are definitely getting shaken out, and they should be shaken out because we Bitcoin enthusiasts going way back, us old timers, so to speak, we know that you invest your money into the blue chips, and I consider Bitcoin, maybe Litecoin, maybe Ethereum, the top three, for instance. The other guys are distant choices. I own some of them, as a matter of fact, but I purchased those guys, the Neos and the Litecoins and the Ethereums and the BitShares. I purchased a lot of those guys with profits from my Bitcoin transactions. So make sure you guys understand, I didn't take hard-earned money and invest in the 5 or 6 or 7 different altcoins that I have. I took profits that when Bitcoin really shot through the roof. I made sure that I had some extra, I took some profits and put that into the altcoins. I put that into website development. I put that into traveling the world and doing certain things with it. So I would have something to show, because Bitcoin seems to be very reliable, seems to be very stable, as far as I can tell, as far as it being around and going to be around. I have a lot of confidence, but sometimes you never know. Sometimes you just got to hedge your bets. So I have 80%, 90% of exposure to Bitcoin. But I occasionally, you take some profits off the top and you reward yourself, especially when you have these extreme run-ups. So anyway, that 80 or 90% is basically the amount of money that I allocated. Not all of my retirement money or whatever is in Bitcoin, but that the amount that I did allocate, 80%, 90% of that is in Bitcoin as compared to the altcoins. Just want to clarify that. The altcoins are only like 10 or 15% or something like that. But we do have exposure. I do have exposure to those guys. But you never know sometimes. Sometimes these small players, these startups or whatever, sometimes they can take off. And you never know what could happen. So anyway, I'm going to wrap this session up because we covered a lot of bases. And I'm going to include the details of the article again along the in the podcast, so you guys can take a look at what it had to say. But basically, it's the bottom line is this: look, I think Bitcoin is here to stay. The New York Stock Exchange owner is endorsing it, and he's making some futures trading vehicles available to members of the New York Stock Exchange and such. There are some things going on with Starbucks and Microsoft as part of this partnership with the owner of the New York Stock Exchange, otherwise known that the subsidiary is called ICE, International Continental or something in continental something. It's ICE. I can't remember what the exact initials stand for, but it's part of the New York Stock Exchange. So between the owner of the New York Stock Exchange, very smart person, and the owner of the Chicago Mercantile Exchange, these people have been investing for 100 years or more. These companies, these organizations, they know how to analyze asset classes. They know how to determine whether or not commodities and properties and assets are worth looking into or investing in it or not. And when the CME, the New York Stock Exchange, even J.P. Morgan And all of these guys, when Goldman Sachs and all these guys start opening up trading desks and investment vehicles and putting their and putting their investors into this cryptocurrency by way of their firms, they know something, right? They're confident. They rather be involved than to not be involved. So don't let these guys deceive you, okay? Make sure that you don't miss out, and make sure you're committed, and make sure that you can stay put. So anyway, I'm gonna let you guys go. And as I like to say at the end of every particular podcast, stay safe out there and keep your eyes and ears open. And we'll talk to you later. Take care. Bye.